Hey everybody, how's it going? Today we're going to be going over some pretty simple stuff, yet pretty important at the same time. Is just mentalities to have while swing trading, especially when you have a chart that looks like this, because it is there's a lot of uncertainty right now. There's a lot of fear. I believe, in my opinion, there's a lot of fear in the market. And as a swing trader, there is ways to take advantage of this. Now, number one is if you're swing trading, again, this doesn't really apply if you're scalping and day trading and that's all you want to do. This is more a swing trader who just wants to sit back and be able to how to enjoy your life while waiting for these trades to happen and essentially just understanding your levels, understanding your invalidation and why it's so important to have invalidation, solid invalidation in the first place. Number one thing you have to keep in mind is in the streams in the past, we have said that we are essentially waiting for a swing failure pattern of these lows over here. We're waiting for some sort of liquidity grab of these lows here into a 382 Fibonacci level, which we have gotten so far. And then all we want to see after that is some sort of move back up above the range here. Now, let's go over this really quickly because I understand that a lot of people are going to be very confused by this price action, but this is just a reminder of why invalidation is so important and why it's so important with swing trading specifically. Of course, with everything, but with swing trading especially, you have to understand that yes, we did retrace somewhat deep for this move. We didn't get some sort of clean retrace of this, previous low and simply get a bounce because fortunately, it's not always as clean as that. The market does tend to like to wipe people out as much as they can before a big move occurs. So if you were to ever trade something like this, and let's say you entered around here, you were like, okay, this is a place where I would look for a nice, reversal because we've gained um, entry back into the range, especially after seeing a move like this. Let's say you even enter over here on this retrace. Where would you put your stop loss? Because if you start getting fearful and you start putting your stop losses anywhere besides the low, then that is incorrect. That is not the proper way to trade a swing failure pattern, or just in general. You don't try to skim a couple of percentage off just because you think, oh, if it'll come here, then it should come here to this low, right? No, that's not the case. You have to have strong invalidations and you have to be separated from emotion when it comes to things like this. You can't just set your stop loss in places where you think, oh, if it'll come here, then that means, absolutely a million percent it has to come here. So I might as well just save myself 1 or 2%, right? That's completely wrong mentality, and that's what will cost you a lot of money and a lot of, incorrect trades as well. Because if you had this set as your stop loss and you simply just moved away from the charts, you just went away, you just went and did your thing, and you let the trades kind of like do their own thing, then you would still be fine. You would still be completely fine. Instead, what's happening is a lot of people would set their stop losses around here, and they get stopped out, and then they see you move up, and they're like, "Oh, I should re-enter, on this retrace, and then I'll enter here, on that move up essentially, and then I'll put my stop loss, somewhere like below this order block over here like this, and then you get stopped out again, and then you look to enter over here, and you're like, oh, I don't have enough capital, whatever. You're gonna keep burning yourself. Is the point that I'm trying to make essentially, and that's why it's so important to just if you just did this, you would have made a lot more money than the person trying to get stopped out and catch these trades. Yes, it does mean you lose an extra 1%, but it's a lot better than the what 4% you would have lost if you put your stop loss somewhere around here, plus the extra couple of percentage if you decide to re-enter and re-put your stop loss in places like these. The market is choppy. The market is brutal. It is unfair. That's just how it is. But that's why you need principles so that you can have standards for yourself and that you can have guidelines for yourself that you can just stick by and be consistent. So if let's say this move goes up, it's a correct trade. If you're stopped out and you missed this trade, then it's simply because you did something incorrectly. You got emotional. You maybe perhaps used too much capital, too much leverage. That's why you couldn't risk putting your stop loss down here. And you need to stay patient. This is one of those things where you simply set your stop loss. Let's say you are trading something like this over here, where you look for the new highs over here. What do you do in this situation? If you want to live your life and just do whatever you want to do and let this trade roll at the same time, how do you do that? You simply preset the take profits on your phone, on your computer, whatever you're using. And once that first take profit is hit, then and only then do you go back and open up, whatever the software, the website, and you just put your stop loss to entry. And then you throw your phone away, and that's it. Okay, that is it. Because once that first take profit is hit, that's all that matters. Your profit's secure, your stop loss is at entry. So now whatever notification you get next on your phone, whether it's getting stopped out or another take profit, you're fine at that point. So there's no stress at that point. So that's the key thing that I really just wanted to say and remind you guys of, especially when you see chop like this, because I was looking at this price action and I'm just thinking it's going to be so easy for people to get burnt out. And another thing, let's say you did enter now again after getting stopped out now. There is still a chance that we just go down and get stopped out. So that means you would have lost you would have lost this 3-4%. And then let's say you entered again here because you I don't know, you did something incorrect. And we come down one more time for this low, then that's an extra 5.6% to 6% that you're losing on top of what you already lost. Just because you didn't want to set your stop loss at the absolute low, instead you wanted to do something like this over here. This is just like I guess a public service announcement, I guess, and a reminder that the markets, they are brutal, they are unfair, they will make a lot of people cry, and have sleepless nights, and that's why you just need rules. You need rules for yourself, because then you somewhat start to detach yourself from those emotions and just trade like a robot, like a machine. And that's the first step to make when you're trying to become a swing trader and the scalp trader and the day trader. So now that I kind of got that out of the way, I'm gonna do a quick analysis for you guys. I'm sure you already know my high time frame bias, and that is that trade that I just showed you. Let's go down to the local time frame and see what's happening here, because I don't want to just make a rant and then leave you guys with that, because that's very unproductive. So let's see. I might need just a minute of silence here, like for myself. Nothing really. Let's look at different time frames over here, see what we're working with. We have this down close candle. Let's look at the daily. Nothing there really. Sorry, I'm just gonna be silent for just a minute just so I can see, and I'll start talking once I have my bearings. At the moment, all I'd say is that we have this massive down close order block. We also have some liquidity built up over here from this low, and now these lows over here. So it's very likely that we're simply coming down to this area here for a swing failure pattern. Now, I would really like to see this section, this range low, to hold for me to stay somewhat bullish on the lower time frame if you're looking for some sort of day trade or scalp. It would be really nice to see this hold, actually. It might take tomorrow, new low, then a move up, potentially. Let's see. Yeah, that's, if you're looking for some sort of support, then I would say at the moment this is all that's really presenting itself. We're simply waiting for a liquidity grab into this order block into the big range low. And then we're potentially on our way back up. Now, if we do lose this and we go down, then there is a major chance that we're simply going to come down and take the overall lows at this point, because once we get very, very close to this trend line, I don't see why price won't want to target these lows as well for liquidity. So we could see something that looks along the line of this even. We simply come up, build up some liquidity, swing failure pattern of these lows here, see some sort of very, very, very choppy price action before another move to the upside. So we could see some chop. It is very, very possible. And again, that is if we come down, I would say, below 56K. Once we breach 56K, I would say, it's looking very, very likely that we come down to these lows. And at that point, we'd be looking for some sort of swing failure pattern, off the swing failure pattern, I guess you could say, before coming back for a move higher. Yeah, it's extremely choppy. This is extremely, extremely, extremely choppy price action. It's very, very difficult to, for me at least, for me personally, to day trade this with high confidence or scalp it. This is the only level, I would say. I would even refine it a bit more. Potentially, well, it's pretty much the same. This is the last level, I would say, of support. Needs to hold. If that holds, then we're looking at something along the lines of this. And pretty much to come up and take out these highs or even higher at that point. I'm going to quickly take a look at Ethereum. Let me take a look at Ethereum. Ethereum might actually look more bearish. Yeah. Second, sorry if the silence is kind of like unsettling. It's just, I am just thinking before I say something rash in terms of, price action, my thoughts. I just want to be sure that I'm as sure as possible before I just say anything. Ethereum kind of hinting at lower, like lower percentage wise than Bitcoin. $3,000 liquidity grab. Interesting. Let's see point of control actually of this range. Okay, there's a high volume node here around this area, which is interesting. Let's check some fibs. Okay, show the OTE. Could see potential dip. That is if we, if we lose this point of control, then it's very possible we simply just come down to take out all this liquidity. $3,000 hasn't been swiped in a while. We built up these like high lows. Could see $3,000 get swept before I move higher. That could be interesting. It is a massive difference than Bitcoin's area of support. But I would say I think I'm gonna just stick with Bitcoin here until this level is lost, and then I'll take a look over at Ethereum and see if it hits that support area while Bitcoin takes out this liquidity, which could then lead to a nice long position. But this is it's super choppy, guy. I'm sorry, like this isn't a majorly helpful analysis. It's just this price action specific right now is a bit hard to read. And I don't want to just say, anything just to have a video about it. Like, oh, this is the trade, because, I do have to, think about this carefully before I just give a random trade. So it is very, very difficult at the moment, very choppy. I would say if we lose this level, then it's looking very likely that we simply come down to these lows. But at the moment, this is the last area of support to look for. Um, so yeah, sorry, not a very high confidence trade this time. We're gonna have to wait for the chop to kind of cease and wait see if this level holds or if we come down to this, and then, in my opinion, price action will look a lot clearer once we clear these areas first. But I hope you at least understood my thoughts on swing trading and stop losses and invalidation and my overall thoughts on this range at the moment. Hopefully next week I'll have some clearer perspectives to share and trades and actual trades. Of course, we are still looking at this overall swing trade where we took this low and came up and looking to come up all the way to new all-time highs. But I mean, more for like day traders and stuff like that. It's a bit difficult at the moment to give you guys a scalp or a day trade, given the context of the charts right now. So regardless, I hope you found this helpful and you enjoyed it, and I will see you guys on the next one. Take care and bye bye.